morning. Good afternoon, my friends across the pond in Europe. It is Friday, September 20th, 2024. This is Option Pit Live. I am Mark Sebastian. I am your only option, and I am joined by Licia Leslie, the queen of the candles. Happy Friday. Missed you last week, Licia. Glad to be back.
TGIF. Well, we missed you. I was here.
Fair enough. So, Licia, we've got quadruple witching this morning, but I think the overwhelming news of the week is this 50 basis point rate cut that just hit.
Yes.
I'll share my reaction in a second. I want to see what was your reaction and how did you respond to what just happened in with the FOMC?
Well, I have to say that I was shocked. I have to say shocked that it was a half a point. I didn't think they should be doing anything. I wrote up on Tuesday night, Wednesday morning, the last Fed rate change was a raise of a quarter point, and it was only 14 months ago.
Yeah.
Now, an economy the size of ours, I would think that you got to let the market play itself out a little longer. I don't think 14 months is enough. I could be wrong. I am not an economist. I could be wrong, but I don't think they should be manipulating so often as they do. I think they need to just let the market gears and machination, just let it work out itself. So I was very surprised.
Well, Licia, I'll tell you, I don't think you're wrong either. What fascinated me was the speed with which the half a point developed. So the Wednesday prior to the actual Fed day, the odds of a 50 basis point rate cut were 14%. By the moment before the rate cut, they were 65%.
Yeah.
And I'm looking at the economic data, trying to figure out where was the economic data that would have told me they were going to cut by 50 basis points. And of the data that had been released, I hadn't really seen anything to change anything. So, initially, I think what we've seen out of the gate is not surprising. Markets are excited. But I think long term, this is going to start to make people think, and it is going to cause some shifts in the market, and it's going to cause some true some people to truly look at their construction in money managers, not individuals, money managers and asset managers and hedge funds, to look at the construction of what they're currently carrying in their book versus what their current, what is going to benefit from a rate cut. And we're going to see some rebalancing, which brings us to, which is why let's bring in Andrew right now, because I want to talk.
Hey, Andrew.
Hey, Andrew, good morning.
Good morning, all. How you doing?
So today's session is basically going to be a big version of Andrew's trading vehicle. The difference being that we're going to be kind of interweaving Licia on the charts and some of my hilarious dad jokes as well. But it's going to be a lot of Andrew's trading vehicle as we're going through things. But the 50 basis point rate cut, I think that's the prime example of what we're starting to see, and maybe why we've seen what we've seen over the last 3 months with the triple Q. So, and I think case in point is what happened on Thursday at the close. The S&P 500, it closed at an all-time high. The Dow Jones Industrial Average, in my opinion, believe it or not, the best indicator of what the broad market is actually doing out of the major indexes that people follow. Believe it or not, it's 30 stocks, but it's actually a more well-rounded index than the S&P 500 at this point. That is at an all-time high. RSP, equal weighted S&P, all-time high. The triple Q is still about 5% below its highs that we saw in July. Just to kind of put that in perspective, the triple Q's high print was on July 10th, 2024. So call it 2 months and 10 days ago. Don't call it that. It actually was 2 months and 10 days ago. And it topped out at 503.52. And we closed yesterday at 483.36. So we're still $20 below there. Call it, a little over, touch over 4%. So the index that had been the big leader is now the laggard. And you call this QQQ leakage. I maybe would have come up with a different term. But why don't you describe to us what you mean by QQQ leakage? And why do you think it's happening?
Well, I think part of the problem is how I think the backs of the great eight are getting a little sore, a little tired carrying the market for as long as. And by the way, great performance of the stocks. The earnings this year were really, really good. I mean, there was growth in. I mean, Apple grew a little bit, but apparently a little bit of growth for Apple's great. But all of the chip stocks, I mean, for the most part, the earnings, but none of the stocks really did anything after earnings this cycle. This was
you're
really
talking
the first cycle.
Apple, Amazon, Broadcom, Google,
Nvidia.
Meta, Microsoft, Nvidia, and Tesla.
Right.
I like to do them in alphabetical order. That's the only way I can.
It's
the
easiest way.
I know that's the way. I didn't forget any of them. Alphabetical by stock symbol. That way I know I don't forget them. Those are the great eight. Remember, Broadcom's worth more than Tesla now, folks. And so you're saying they had great earnings, but
good earnings. Good earnings. Good.
But they didn't do anything out of them.
Right. And, and Tesla's been suffering, although it has come back, but I think it's flat from December. I think it's still flat relatively. If I look at it here. So
year over year, Tesla is essentially flat.
Yeah. So you're okay. So at some point, and you always have this with market leadership, you had it with internet, new technology, internet, right? The internet was dragging everything. And if you recall, everybody forgot about this stock called Berkshire Hathaway when the internet boom happened. Like, oh, this tired old guy doesn't know anything about anything, right? Now, clearly Warren did change his stripes a little bit, bought some Apple and made 8X on it or something.
He's done well.
He sold some this year, mostly because it just got so huge, and I think it's still the biggest chunk of his portfolio, still long, pays a dividend. But maybe, he's looking for, I'm just going to say, the best investor in the world. He's taking profits and looking for opportunities elsewhere. The easiest way to look for opportunities is when you have some cash, right? That's how markets make bottoms. People raise cash, except Buffett, he raises cash in market tops, not market bottoms. So, and I think that's just a metaphor for what's going on, in the Qs. It's not like they can't grow and can't, make a move higher this year. Sure. But, are they going to be up 80% again next year? Is Nvidia going to turn in another 80% year? It's possible, but I think it's tougher with where they are at this level. You're talking $1, $2, $3 trillion already now for these companies. So they got to grow. They got to do the great earnings thing again, which again, possible, but really tough to get that performance. And Microsoft, I've noticed, has slipped back a little bit. Yeah. I was looking actually to try to sell some puts in there. and I blinked and it's up $40. So Microsoft like 470, 480 was trading like 390, and then or $400, and now it's up 10% already. So
they can still move, but
they can totally still move.
To your point, I think that August 5th kind of sharp sell-off where it was actually led by those grade 8. And then when they got that subsequent rebound, a lot of portfolio managers looked at how heavy their portfolio had gotten into those 8 stocks and how much beta they'd gotten to the Qs. Beta meaning correlation, meaning how much you track just to the triple Q, and gave themselves a little bit of a and decided to do a little rebalancing. And so with this QQQ leakage, where does that rebalance, you're seeing that money go, the money's not leaving the market. I think if the money was leaving the market, that would be a scary thing, right? If it was entering bonds, if it was jumping into cash. I think we're clearly seeing with the Dow at all-time highs and the S&P at all-time highs,
going somewhere,
even with the Qs at not all-time highs, that it's going somewhere. Where is that money going?
Well, I think stocks that have that are starting to show some earnings rebound. Stocks that have gotten kind of bashed a little bit. They it's like a lot of stocks. People bid them up on high hopes, bid them up to highs, and then maybe they miss a couple of earnings, and then they smash them, right? Down 60, 70, 80%, kick the stocks in the teeth. We've said many times, like this, this stock is getting kicked in the teeth. And then people forget about those stocks, right? Because they have fallen out of favor, out of fashion. And then all of a sudden, the companies kind of retool and kind of get their act together. And we've highlighted a couple on here this year. Like Chewy in December, that was a good example. It was a $120 stock, went all the way down to 15, back to 30.
Yeah.
Hood, $8 stock, now 20 something. So there are, as soon as those as soon as companies start generating earnings, the market starts to care. Institutions start to care. Why are the great 8 doing what they're doing? We just talked about it. Their earnings,
generate a lot of earnings.
It's earnings growth. Like AI was somehow, some way, I don't know how, but generated huge earnings growth. And it's just how much people want to pay the multiple. And when stocks are out of favor, the market gives it 0 multiple. Like, we're not going to pay a premium for this. And then all of a sudden they're like, oh, whoa, wait a minute, this stock can start growing again. And then the institutions start to find their way back into these names. And if you think about it, how did NVIDIA go from $120 to $1,120? Was it just retail buyers buying one?
No.
It was all of a sudden folks are seeing, like, big money seeing the writing on the wall, and they're like, okay, Vanguard, BlackRock, whatever, they're just loading up on this stuff. And then wow, you get a rally. Oh my gosh.
And now these names have kind of
popped out. And then you hop in and they sell it to you.
And now the cycle, I think, on a lot of these mega caps has kind of topped out. So these mega caps were like think of the mega caps, at least over this last year, they were like that really good looking guy or girl that you were but they were a little bit crazy, but you're like okay with it because they're really good looking. But at a certain point, you're like, okay, I've had enough. And now you're like, hey, where's that still good looking person that can cook and they can carry a conversation? And they're
I love that you said they can cook at the top. The top of your list. They can cook.
Yeah. Where's that
he's a guy. That's it right there.
They're smart. They got some earnings potential.
Where's that
person? Let's get them back. So maybe a little bit of that. Licia, to Andrew's point on this, and that introduces Andrew's idea of this flash 10, where the money that is now leaving the triple Q is entering into a lot of these earnings turnaround stories. And we're going to dig a little bit more into that in a second by talking about how you see some of these flash 10 names, Andrew. But Licia, I'd love to get a look at your charts to kind of really point out what you've seen between the Qs and the SPY and what's happened over the last, the course of the last few months or so.
Sure. Here is my Q chart, QQQ. Yesterday was up against resistance on the high.
Are you sharing your screen?
Oh, shoot. Shoot. I'm so sorry.
You should be. How dare you? No, I'm kidding.
Do this how many times and I still, there we go. Sorry about that, Urban. Yesterday's high hit resistance, and sure enough, we rolled over. Today, that resistance is going to come in about 487.5.
Okay.
Now, my SPY, the pitchfork was holding SPY down. As you can see, it could not break through the top of the pitchfork there. Way back here when we were testing the highs in August, could not break out over that. Yesterday, finally, we did. The day before, though, touched it and rolled lower. Yesterday, we finally traded over it. Now the question is, do we trade up into here? 574.30 is going to be some resistance. We need to break out and close above there to enter this older pitchfork. If not, look for a close below 569.60, and maybe we have a little doji here and roll lower. Hard to say. We need to see what happens today.
Yeah, and the last one of these I want to look at is the diamonds, because like I said, that probably shows that leakage may be better than any of these other indexes. Look at the way that thing has been performing, and look at the upside room that one has.
Yes. Now diamonds have broken into that pitchfork, same idea, but they are already into it. So looking higher, unless today pans out to be a hanging man, watch for a close above or below 419.36. More of a rally. If it closes below, we may retest the support down here at 413.12. Did you want to look at the overlay, Mark?
Yes, let's look at that overlay. But like, Licia, do you notice that? Like, Qs are stuck at resistance. Yeah. S&P is kind of in no man's land, trying to figure out where it's going to go. Dow is through that resistance and is starting to move higher. That's that separation of money flowing out of those mega caps and into
industrials
and utilities and staples and things and things like that. All right, so here's that overlay. Let's take a look.
So the candles are the Qs, and this red line are the diamonds.
Okay.
So they follow along pretty well. Diamonds took off here before the Qs. Seems like a bigger jump. And then the Qs caught up there. Diamonds look like, Qs look like they fell a lot more than the diamonds on this sell-off.
Oh, yeah, they did.
A lot more. And then diamonds look to continue to rally.
Yeah, you see them starting to close that gap. There's mean reversion here. Over the long haul, broader indexes that tend to outperform tight ones, although the Qs have really been performing the last 10 years. So kind of interesting.
On the Qs today, also watch, we're retesting this previous high. That's going to be resistance there today.
Yes, it is. And we'll dig in a little more on that. So Andrew, out of this rotation, when you're looking for candidates, you're looking for what you call option fingerprints. So you see the option leakage, and then you look for whether that leakage has fingerprints on it. What are your option fingerprints And why don't you? My understanding is it's a combination of high open interest, your earnings turnaround story, high implied volatility. So why don't you kind of really briefly walk us through that?
Okay, sure. So there's a couple. I have a. Is it time for my slide, or I guess so?
Not quite yet.
Not quite yet. So
Just
let's wait for
give
that
us the
first.
little
So
speech.
just
Tell me about it
in
first, then we'll
general,
look
the
at the
first thing I
example.
want to do is just watching stocks go up and down for 30 years, right? You see a lot of stocks go, they go
Mhm.
up, everybody loves them, then they hate them, they go to nothing, and then they resurrect. So the easiest story that I could tell you is, let's say, NVIDIA in October 2022, while it was a widely followed stock and people loved it, before it made its 10x run, had a relatively low option footprint farther out. By the time it had made its run, open interest in leap options exploded. So by the time it got from 115 to basically 1,115, institutions started to pile in big, right? So you're looking at the volume come into the name. The only way something really explodes is if institutions love it. What are a lot of institutions going to do? They're going to buy leap calls. Why? Because they don't want to deal with short-term option trades. Like, so when I started trading leaps, I know this is going to make me sound really old, but
I remember.
they invented leaps like in 1990, I think. Okay, 91. Why? Institutions wanted it. Why is the SIBO listing a new variance swap right now? Institutions wanted it. So, okay, if there's something they want in general, they're going to trade it. And once you see that paper start to roll in to the name, you're like, Now, before the footprint, right? Part of this is I like to see the stocks make 52-week lows. And this is not a bottom, looking like trying to find a bottom on a stock. The fact that it makes a 52-week low doesn't really matter. I actually like to see it come off the bottom. I want to see a move. Okay. Then I want to see some flow into the name. I want to see some good institutional flow. I'm not looking to find the bottom. I'm just looking to catch a little wave where the stock starts to find institutional favor again. And that's basically, and that in the fingerprint of the institutions is going to be in just, and again, my view, buying a lot of, longer term options. And generally, the more in the money or the more options go in the money, that is more institutions looking for, they're long, they want to stay long, and they want to ride it for the year. And that's what they do. So that is it's a process. The volatility part is sometimes traders and institutions are looking for more speculative options, and they'll start buying out of the money in size, and then the vols start to really blow up. So that would be sometimes like a third piece of the puzzle. So, your option fingerprints are looking all over the open interest in these longer dated options to see if there's any action there or a certain type of action followed with the underlying move.
Okay.
That's it in a nutshell.
Yeah.
Andrew, I like that you say you want to see it trade off its bottom. One of my big rules is to wait for the confirmation, wait for the price to reveal itself that it is actually moving in the direction that you think it's going to, right? Then you hop in. You may pay a little more, but it's worth it because you're going to be right versus trying to get in too early and then you're wrong and you lose.
Stocks can sit
And
in
you're sad.
Stocks can sit in no man's land, the dead zone for years. Look at GE, right? Or what's Andrew? What's your example today? On the
what's a good one is like pull up 3M. Like that's one that we have talked about here.
Yeah,
that's on
for sure.
My larger list.
Yeah, no, let's look at your example right now that you wanted to look at.
All right, pull it up.
Well, no, no. I mean, share your. Let's
share
let's
my
pull
screen.
that one up.
Yeah, I think I have. So the example here is HIMS.
Okay.
This particular one that I have here is HIMS, where again, it is the stock was going up on earnings growth, little disappointment, sadness, stock dropped 50, 60%. And it is now making a move on the bottom from the bottom on earnings. Again, mostly the story, a big part of the story is fundamental. Now I'm like, okay, as far as I'm concerned, and then I want to see a little bit of in the money call action in the long-term options. So that would be like the next, our next slide. So you start seeing like all of a sudden you're getting a build up. It's just a relatively thin float. So you're seeing more options, again, holding open interest in the money. And you want to see that build. So as we go from 2025, 2026, 2027, more institutional buying goes, that sends, right? That should, in my view, send the stock higher. So this would be this is a candidate for me. I'm not sharing the whole list, but this is one stock from the list where I want to see that in those in the money buyers, I want to see them be right. Number one. And I want to see them hold their open interest because they're not looking for 1 point or 2 points. They're looking for, 10, 12, 15 points, which I think the stock easily could get back to its highs of 25 within the next 6 to 9 months. And then I would structure my trade around that.
Yeah. So let me show you an example of. So Licia, I want you to chart our HIMS, but let's take a look at an example of a name where you don't see that kind of what Andrew's talking about is. So for example, Ford, it has done nothing for 2 years. You could be trying to go long this thing, and believe me, many of us have. And but you could be trying to go long this thing for the last 3 years and gotten nothing out of it since that thing fell. Andrew, I like your ideas for 3M. GE, how long did GE sit in no man's land after its reverse split? I mean, it did nothing forever.
Right.
So having these, Licia, I show people Ford.
Ford? Well, here's GE. I can see right here what you're talking about. GE
just does nothing. For.
And then finally someone says, well, GE's way overdue. Let's buy it. Well,
yeah.
Well, you had stronger, like all of a sudden GE, the earnings turnaround came back, whatever, nuclear, whatever.
That's exactly what it was, Andrew.
Their act together.
That was earnings right there.
Yep. Yeah. And look at Ford, though. Ford is currently in that period, right? It has not done anything for 2 years. So I'm going to guess Ford is not on your Flash 10 list.
It is not on the Flash 10 list. It is on the broader list. So
it's on your watch
list of stocks that stink, and we're waiting for them not to stink, basically.
Yes.
So that is on the stocks that stink list.
It's on the stocks that stink list, not on the stocks that are starting to not stink list.
Correct. Not I don't know how official sounding that is, but I think people get the drift.
Not sure what's going on with TradingView here.
Yeah. So it's like there you go. There's HIMS. So
there we go.
So I mean, look at this.
Yeah, it looks like a big move, but down here you're 9.5, up here you're 14 3/4.
Yeah, but
yeah, sideways.
I mean,
look how high it was back here.
I mean, it had a nice little run during 2020, 2021 during the meme thing. But if you went back 5 years outside of the little meme push, you're in the exact same spot you were.
Right.
You're right. Sideways action.
And so, at some point, but let's bring this back to HIMS because Andrew just brought up HIMS. He said that one is on your maybe going to enter your Flash 10 list, right? It's
yes. This is moved on to the looking not stinky anymore list.
All right. So this is hims and hers health.
Well, let's just call it, it's a growing online healthcare market for people that have certain issues. Yes. Okay.
Yes. Specific issues.
Which we won't discuss here.
Yeah.
We are not medical professionals. But we will trade the stock.
Yes.
We will
Exactly.
Okay, guys, we're not on the trading floor. We can't do this.
Yes.
Right.
So, Licia, never mind. I was going to make a joke, but I won't.
I know. So
every one of us,
I like
every single one of us is trying to stop ourselves
exactly
at some point.
So Andrew, Hims looks like it's going for its previous, most recent high there, 1780. And then from there, you're going to go up to 19. Then you'll be in this previous pitchfork, and that's going to take you up here 2062.
Okay, so
even
Licia,
higher.
Where would you say the stiffest resistance is going to be? Okay, I had to do it.
He did pretty well though. 36 minutes in, he held for a long time.
All right.
You just couldn't resist.
No.
That's hilarious.
All right. So where would you say is going to be the spot where, you know?
Well, entering back into, well, you want to clear these highs. 17 3/4 is going to be a bit, but then above there, yeah, and once you clear 1830, you're going to go back into this pitchfork, and I think you'll be trading higher.
There you have it. So, where is my rundown? Okay, and now the next piece I kind of want to talk to is, you know, the greater portion of this has been, you know, is sector rotation. And, you know, at the top of the show, we talked about the FOMC rate cut, and that is going to affect certain sectors. Winners, when rates are falling, tend to be the utilities, consumer staples, you know, dividend paying stocks, industrials, energy twofold, because energy tends to pay a nice dividend, and energy sneaky borrows a ton of money. They are constantly borrowing money to manage their float between when they're delivering oil versus when they're pumping oil. It is a you know, interest service is a major part of the energy business. And so, Andrew, who do you see as the winners and losers out of kind of the FOMC, and what sectors are you watching on the in sector rotation?
Well, Frank and I in Cap Gains, we talk a lot about like nuclear, and actually just today, apparently, it's hard to tell if anything's real news or fake news, but they're going to restart 3 Mile Island because Microsoft needs power. So
3 Mile Island?
I read like FinTwit in the morning, you know, for 5 minutes. Okay, what's news, what's not news, just to kind of get a little sense of what's going on. Because mostly I just read volatility and order flow really to see what's going on. You can't really believe the news anymore. But if that's true, which I think it is, and we've seen growth names we like Cameco Corp and stuff like that. Like utilities, think of the growth market for utilities in general in AI. You know, it's sort of like the picks and shovels play in the gold rush kind of thing. It's how Cisco got so big in the 90s, right? Building the internet infrastructure out essentially. So utility companies. So you should see some outperformance, I think, in XLU, things related to data centers, maybe solar energy companies that provide like, you know, they're going to put a mountain of solar panels on top of these data centers just to power them, to make them more efficient. So I think those are areas that have high potential spillover for growth with AI. So, you know, we have all the AI stocks, the chip stocks and everything, but there's also massive businesses that could grow quite large, servicing the data that's, the data centers that are necessary. So I think that's a good, anyway, so utilities, I think there's a reason of growth. And I think the interest rate thing is another one. All of a sudden a utility dividend right now with projected growth looks pretty darn good when interest rates could be going down, or at minimum, we have a little jumble with whatever the Fed's going to do. But right now, I think the market's looking for more rate cuts again. They've sort of plotted out more rate cuts. Who knows? But a utility, XLU, like there's a reason it's just bouncing, right? That's a real thing. Again, ultimately earnings growth makes it happen.
3 Mile Island's owned by Constellation Energy, for those of you that are trying to figure out who owns it. So
we'll see. I can't remember.
I don't know who. That's CEG.
CEG. Actually, that was a pick for Frank. A couple of 2 weeks ago, we tried to find some calls. It's up $30 today. So actually, that was.
Oh my gosh!
It's the one, or it's up $25.
There you go.
It's the one calls I couldn't buy.
And you want to know hilariously, you know who owned this until 2022? Exelon, because Exelon is one of the most who owns Pico for my friends in Philadelphia, and who owns ComEd in Illinois. For those of you that hate your power company in Philadelphia and Illinois, the most mismanaged, the second most mismanaged, third most mismanaged power company in all of the, fourth.
Unbelievable.
Fourth, you got whoever's running California, they're first. Whoever's running Texas, ERCOT, they're in second. Con Ed in New York, they're in third. And then I'm going to give it to Exelon in Illinois and Philadelphia. Those are your top four.
Anyway, this is on our Constellation is on our pick list. It was one of Frank's stocks, and he was right.
Wow.
He usually is.
Yeah.
But it's the only trade I have missed this year that I couldn't get a fill. Now I know why.
Yeah, look at that.
Yeah. But yeah, to your point, so this sector rotation actually takes to a bigger piece. Licia, I want to take a look at two sectors and kind of compare what you see on the charts, because obviously the best performing sector over the last couple of years has been XLK. And boy, it's bumping right against resistance, has been kind of following that median line up for a while, right?
Yeah. October of 22.
This is this is a good pitchfork. So you can, this thing's held pretty nicely.
What would you like to overlay?
Well, you don't have to overlay. I just want to kind of point out where that one is. And then I want to look at XLE and kind of, I think we'll see.
XLE is not going anywhere. Yeah.
Yeah. Look at this. So it's into your, your extension pitch, your extension line.
That's sideways.
So if that rotation is going to happen with rates dropping, this is a real opportunity. Even if oil just sits here, if rates start to drop, oil is going to take off, or energy names are going to take off because their borrowing costs are going to plummet.
Well, also the dollar's going to get crunched, right?
Mm-hmm.
As we drop rates, the dollar's going to go lower and lower. Right now it's holding support here that it's held for a long time, but we keep lowering rates, the dollar's going to go lower.
And that'll actually push oil higher as well.
And gold. Did you see gold this morning?
Yeah, having a nice day.
Yep, up 25.
All right. Well,
so one last one is another one that could benefit is Bitcoin, right?
Oh, right. I didn't even think about that one.
Once we bust out over 63,381, Bitcoin has pretty good room to run. 69,000. We won't say anything about that number either.
No, we will not. But I like it up to that. And let's settle with I wanted to just close with the Russell because that's another one that wins with sector rotation
and energy.
and yeah, and that's a lot of energy.
IWM needs a bust out above these previous highs here.
But I think
And
it's
you
gonna
know,
be
it's
right.
funny, it keeps having these wicks, these long upper shadows, which means that it reaches a price and the sellers come in and they close it down lower on the day, on the session. And yesterday was a hanging man. We need some bullish
decision
evidence. I
making.
mean, it's going higher, but the sellers are kind of still out there.
Yeah.
We want to clear 227 to really, you know, get up here 233.40.
All right. Well, we are up against it. We've got Licia. We're currently down 1/4 point on the S&P. IWM is pretty much flat. Call it down at 1/10%. The NASDAQ futures are down about 0.3%, and the Dow Jones Industrial Average is down about 0.1%. What are you thinking for the day? We'll start with Licia.
You know what? I keep looking at the Q's chart. If we gap lower, which it doesn't look like we will in the next 15 minutes, but what can form here is an exhaustion gap, a gap up here, and then this candle will be up there by itself, a gap lower opening. That's called an exhaustion gap, and we can roll lower. So I'm watching Q's pretty closely.
Andrew,
It
what are
goes
you
along
thinking?
with what Andrew's saying too.
Yep. Andrew, what are you thinking?
I think that we'll have a little bit of relief here in the morning, and then it ends up getting back to unchanged on at least for SPX, you know, SPY. Because I don't think we're getting much of a solid signal from VIX anymore. Maybe we have maybe a week or two as VIX rolls into the election volatility, and everything is going to be like for a lot of trading, you get a pretty good signal from VIX, but now essentially the market is going into this earnings cycle of the election. So volatility will be a wonky signal. It won't be a great signal. So I think there's going to be some mess. A lot of essentially the model is kind of broken because of the election, at least from vol point of view. So I think, again, with rates going down, I hate to say it, but I'm going to be in the buy the dip camp again. I don't hate to say it. That's what it is. So closing some SPY put spreads that I have this morning, if there is any kind of slowdown to the sell-off, and expecting us to be unchanged by the end of the day, at least for SPX.
Real quick, Mark, before you go, I just want to say, remember, the market hates uncertainty.
It does.
Uncertainty is what a lot of the reasons why we sell off. And did the Fed leave us with uncertainty, or did they leave us feeling better? That's the question, right?
Yeah. So if you want to know why we tapped out where we did yesterday, that is S&P futures exactly 5,800. We will revisit that today. We're going to close the day up just off yesterday's highs. And then Licia's right on the exhaustion gap. But I think that's going to happen next week after we get expiration. Expirations tended to be a little bit more bullish. And I'm liking us to move higher. Hey, so you heard all about Flash 10 today. We've got a really special offer, and if you missed Andrew and Hannah going deeper into it, I would invite you to click the link that's in chat. You can watch Hannah and Andrew really talking about Flash 10 and review everything you get with Flash 10. Click on the link. It is in our chat, and it is pinned to the top of the chat here. And if you didn't get your list, email us support@optionpit.com, and we will send it along your way. So, guys, great show today. I appreciate it, Andrew. Thanks for sticking around the whole show. I promise everybody will get an opportunity to potentially take a ride on Andrew's trading vehicle next week. But this was essentially Andrew's entire trading vehicle. So for Andrew T. Giovinazzi, the Viking of volatility, the vicar of the VIX, and Licia J. Leslie, the queen of the candles, the empress of the the empress
I
of
think it's
the
getting late, guy.
oh, I had it for a second, but it's gone.
That's okay.
All right.
Duchess
Anyway.
of Doge.
The Duchess of Doji. I'm Mark Sebastian. I am your only option. Have a great day.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.